Hey everyone, I'm Tom Thornton with Hedge Fund Telemetry, and we are doing our bi-monthly short interest data webinar with Jeff Garbaz of Erlanger Research and Quant Partners. And I think it's going to be a very important one for us this webinar, because we did see a very large increase, as we did say the last one we would see with the market going down. The New York Stock Exchange was up about 3%, and the NASDAQ was up 5% with the short interest. I'll let Jeff get into it, but here's our disclaimer for everyone. Please speed read.
Yeah, sure. So if we look at the type classifications, there are 4 types, and they're driven off of 2 indicators we look at. First is a technical rank, and that technical rank, what it does is it tracks how stocks are doing against the S&P 500 from 10% to 100%. And roughly, we got, say, 5,500 stocks right now. What we don't do with the model is we don't throw 550 stocks into each of the 10 categories. What we do, what it does though, is it's a pattern recognition program that Phil developed in the early 90s based off of Cohen layer mapping, which is like barcoding. And so the idea is when stocks are struggling like they are now, we might have 3,500 stocks that are ranked between 10% and 50%, and only say 2,000, which we're not even at that level now, but we'd have 2,000 between 60 and 100%. So once we know how well a stock is doing or how poorly it's doing, we want to look at the short interest. And what we do with short interest is we take the absolute number of shares short, we build our own short ratio, and then we look at that range of that short ratio historically. So in a type 1 situation, we have a tech rank that's equal to or greater than 70%, with short intensity equal to or greater than 60%, and the short ratio at least 1.5 days to cover. Now, some people might say that that days to cover is low. It is, but traditionally the large cap stocks have lower short ratios. And what you're still trying to do is to capture the range of the sentiment over the last 5 years. So even though a stock may not have a huge number in terms of the short ratio, it's still important because it lets you see how the sentiment is. And with a lot of the larger cap names, they may trade a lot. And so it's harder to get that short ratio up to a higher level. So type 1 is a short squeeze. Type 2 is doing well also technically, but no one is short. So in other words, if it's going to move higher, and someone on TV says, oh, the stock's in the middle of short squeeze, but it's got very low short intensity and a low short ratio, the odds are it isn't going up because people are getting squeezed. It's going up because people are buying shares. And then a type 3 is where the shorts are making money. So it's weak technically, and there's a decent amount of shares short, and the short ratio is high. And then the last situation, which is a really big characteristic of what's been going on this year so far, is a long squeeze, which is weak technically and no one is short. And if you think about this, let's take a stock that had been doing well. It ran up a huge amount, then it starts rolling over, the tech rank drops, no one is short. As people go to sell shares out of it and there's no one covering, it just continues to drop and drop and drop. And it's the worst type of situation for a stock to be in, and it's the best type of stock to be short. So that's a kind of quick summary of what Tom has put up on the screen. Yeah, what I'm going to start with first, though, is I'm going to do a little bit of our report that we put out yesterday and show a couple things graphically. So as Tom said, we got a 3.15% jump on New York Stock Exchange, and NASDAQ went up by 5.15. And what's interesting is we had an increase in short selling for 19 of our 24 sectors. And last time was 22 of the 24. And what we do is we then average all the sectors to figure out where we're at, and we're at 39.18 intensity from 37. It's very hard to get all the sectors to be a really, really high level. Typically, the highest level I've ever seen is kind of like the mid 50s, and the lowest level I've ever seen is like down in the 20s. Typically high 20s. So right now we're kind of at average short selling, but unlike some media reports out there, we aren't at a level that's at a low point.
Just one thing before you go, just the comments about the NASDAQ 100 ETF, the Qs, a very slight increase, not much.
No, not much at all. Now this is looking at short ratios off of stuff. So yeah,
Mhm.
just on the queue itself, not as much, but we'll look at the underlying as well when we get into chart room. So here's the first thing. You can see the biggest sectors that had a change in short intensity. The leaders were commercial, and what we want to see is we want to see a sector that has a good tech rank and a good short intensity. So these what's over here in this sector rank. Is red means bad. So you've had an increase in capital goods as an example, and it was the second biggest increase. So people are seeing some problems there, and they're adding to it, but it's still at a lower level at 41. But it's notable that these are places where they were going. Utilities, automobiles, and components, which is kind of interesting because now we're in this problem with Canada where a lot of auto parts aren't coming down from Canada into the U.S. and it's going to slow down production. Hardware and equipment, and then really not a lot of drops. It's interesting though that semiconductors went down a little bit, and we focused on semiconductors in this report because one thing we do is we quantify whether we have smart or dumb short sellers. And now we've been getting an increase in sectors with smart short selling from dumb. This entire move from basically 2020 upward has been driven by dumb short sellers. But now, as an example, semiconductors are kind of at a lower level, but there's a fair number of stocks which we'll look at that do have high short selling and they're smart short sellers. So because of that, I'm not a huge buyer right now of semiconductors. I'd rather buy the sectors in technology, computers and equipment, and software would be preferable because they're being driven by dumb short sellers, and there's potential for squeezes out of those.
Hey, Jeff, one thing, energy, we talked about it last time. I see it's number one there on the sector rank.
Oh yeah.
And the shorts were adding into the lift. And it looks like they
covered a little
some.
bit, but we're still at a pretty good level. We'll look at that inside of a chart room.
Okay.
I'm not concerned that the squeeze is over by any stretch, but it was a little bit of, they were starting to feel pain, so they started to do a bit of covering. And then, as I mentioned, short intensity rose for 19 of the 24 sectors. To that point, Tom, you can see energy is number one there. And then we look at the short rank. I'm going to come down and let's see. Got it. Yeah, here we go. So you can see energy is roughly, it's at 44.28. The most heavily shorted sector right now is autos and components at 52, and then retailing at 49.88. Food staple retailing, real estate, media, healthcare, those are kind of the upper ones. And, energy still at a decent level. You can see the most least sorted sector is diversified financials, which to me kind of makes sense actually, because if rates are going to go up and diversified financials are going to move, then you would expect that there's not a lot of short selling. The problem is the tech rank is still really struggling in diversified financials at 43.25. And you can see energy, which is really strong. This gives you an idea of how strong the tech rank can be. It's at a 64.12 right now. So those are some interesting takeaways. I'm going to come back to this in a second. I just show everyone here. Here's an absolute number of shares that are short. You can see how it's grown over time, kind of stayed, and we've been kind of growing the last year, as I've kind of mentioned in the past couple of calls. But look at this. NASDAQ is like at an all-time high. It's above this prior peak in 07 into 08. And you can see there's each individual report. We haven't had a real big drop in quite a time period. And as Tom mentioned, the NASDAQ went up over 5%. And kind of a fun thing to look at here is look at how many type 3s we have, 661. Why? Because tech ranks are poor. And look at how many short squeezes we have right now. We only have 170. So the combined is 831 from both of them.
So the type 3s, just to reiterate for people, those are
shorts, correct?
Right. The shorts are winning.
Yep. And then here's for the entire our entire universe of stocks, which, as I said, is about 5,500. We're up here right at this 40% line, and you can see that's definitely like average, and then above it. And what's amazing is, that's the S&P, the rusty color here. And we're just, we're kind of like in a topping, kind of starting to go sideways a little bit. So it's going to be very interesting to see what happens if we drop, if people start to come in. I would, one thing I've mentioned to Tom is that there have been plenty of times when the Erlanger commitment of short sellers sees a drop from dumb short sellers to smart short sellers, and it has coincided over time with you know, a market that starts to get into trouble. So it needs to be watched, you know, kind of, you know, going forward right now. It's coming back up here. This is just kind of interesting. We focus on semiconductors because, as I said, the rank isn't that great. It's at 16. The tech, the ecos has turned negative, which means we got smart short sellers now, and the volume swing is still negative. So there's not a lot of great things going on with semis right now. And then here's our list of the most heavily shorted semiconductor names. And what's so interesting, it's a list of 25 names right now. Remember, there's only two groups that make up semiconductors, semiconductors and semiconductor equipment. And, you know, both the 4s and the 5s, so you can see a red is a 5. So as an example, form factor, the shorts traditionally get it correct. There are, out of these 25 names that are heavily shorted, 14 of them have a rank of either a 5 or a 4, which is, a 5 means the shorts make money more than half the time, and a 4, they're almost at a 50% level, but not quite there. So there are a decent number of names, and I'll leave it here for a second for people to just, you know, take a look at, and maybe I'll put this up on my Twitter page or Tom's Twitter page as well, so people can see what those names are.
I'll post it. Wait, just stand by.
Okay. Okay, so
I'm actually acting like I know how to do technology. That's amazing.
there you go. Okay, so now we're going to go into chart room. I'm going to go to a new share. So you can see chart room now, right, Tom?
Correct.
Okay, great. So what's interesting right now is, so a lot of these, the big guys just don't have shorts in them. Amazon obviously has had a bounce off of this low, but it's only 33% or 1.04, and the tech ranks at 50%. So, and what we're seeing is, the last time we did this, we were talking about put squeezes and the potential for a bounce in the market, because we had lots of sectors that had an option rank, which is pretty high. And what's interesting now is that number has really started to falter. So I don't think you can count on much more upside due to an extreme position. Tom, remember the last time we did this? This entire column was green.
Right. So basically, what I found really, really beneficial, and I've been putting it on Hedge Fund Telemetry's daily note often, is looking for the high number or high levels of put buying and then high levels of call buying. And you can basically fade those signals. And again, I think that what's happened in this last bounce is we've had all the people that were buying puts, they've been squeezed higher, and even the shorts have been squeezed higher. And I've seen that on some of the, you know, from the Goldman Sachs most shorted baskets to the Credit Suisse most shorted baskets. Those have been pegged on the up, being at the top of my, I mean, most short, the Goldman is up 1.6% today, and the Qs are down 18 bips. So that to me is saying that there's still some shorts and puts getting worked off.
Yeah, look at Goldman. I mean, you can see right down, and I'm going to make this bigger for people to see, and I'm going to kind of expand the bars out a little bit, but you can see right here, as we hit this low, then boom, we started getting day after day excess put activity. And then we worked our way into the DMA channel, which is an indicator we use with the put action to determine when the put squeeze occurs. Put squeeze started right at the end of January, and then boom, this is where we are now. And you can also see here is a put call 10-day ratio, and then the call put 10-day ratio. Just so it's kind of interesting for people to understand the logic behind this. This is actually a median. So we throw out the outliers. And so really to get here and have a high put, it's got to have held pretty nicely with excess put activity over the last 10 trading days. looking at open interest, premiums, money flow, and the total number of contracts that have existed. Hey, Tom, I want to look at something real quick because like this is kind of an interesting idea. Yeah, so it's kind of interesting. Some of these Robinhood type stocks or ape stocks, whatever you want to call them. I noticed yesterday that I like to track unusual options activity. AMC was on the list, but the overall stock volume wasn't really high. And you can see here now the call put is starting to go up, and the option rank is starting to come down. So a lot of time needs to be paid to looking at options, because if there's a lot of activity, that can influence the stock price. And so I found that I wasn't even thinking about that until I just pulled up like usually when you sort by the options activity, it's always ETFs. And then I eliminated the ETFs and I just had the stocks, and I was like, oh, this thing is moving today. And hey, guess what? The calls, they're getting active on the call side. So
They're doing it again.
yeah, they're back to their same old tricks. So Tom, at this point, do we want to just open it up for stocks to look at from people with questions?
Yeah, but I think one of the things that is really important right now, and maybe it's the regime we're in with all the new option traders out there in the markets. I think that we need to really spend more time looking at the option rank and how that's actually a little bit closer and more timely setup, since short interest comes out every 2 weeks.
Yeah.
So I think it's like
this gets updated every day, to your point.
Yeah. And I'm definitely posting a lot more on the notes.
Well, just for everyone to understand too, like so over this section over here is these are all our charts, and we have just normal charts that are can charts, the top level here, and these are all kind of custom charts. And then over here is where we have our scans. And let's just look at this, Tom, because this is kind of a fun place for people to look every day and kind of be on top of the options market. So options in the NDX that had unusual call activity yesterday, or unusual put activity, and then put open interest to volume outliers. And then also up here is call open interest to outliers. I call the call open interest to volume outliers, I call that my Melvin screen. And I call this one the other guy who got nailed with Viacom, the put open interest.
The Bill Wang.
Yeah, Bill, exactly. Yeah, so we come look at this from yesterday. Let's see, was there anyone who was potentially, let's look at the ratio. Yeah, so here is put volume to put open interest. So you can see Upwork. So maybe someone was basically shorting it by getting active on the put side. So that's kind of an interesting way to look at.
Firm was in that one as well. Actually, they're making money on their puts right now.
Yep. Well, today it's dropping. So it's just a great way to come in and look at these couple screens to see what's happening. And then
could you
it's kind of S&P 500.
One thing?
Go ahead.
Okay, we're going. No, you go ahead. I just am watching something, dropping kind of hard right now.
So the S&P unusual call activity. So I can come in and just click, and you can go back days too. So I love it when something comes out news wise, and let's say I go back the last couple of days and I'll look at the call activity and say, hey, was anyone ahead of this, coming in? You can see Laboratory Corp traded 82.5 times its 10-day average yesterday in terms of calls. So it's like, was there something going on there that was interesting? Not really. It's kind of just
Mattel had earnings and they spiked, so that was on your list.
Oh,
yeah, no,
there's Mattel, yeah.
There you go. But that's I think people.
So I think options are just a key thing to to kind of pay attention to, as Tom was alluding to. And then when you have a scan, like as an example, let's look at, this is kind of my favorite fun list to look at always for just kind of ideas that should work. These are all stocks that are strong technically. And on top of it, they have excess short interest, you can see right here. And then I like to look over to the option rank and say, okay, what else on this list has excess put activity? So like CNX does, Cooper, CHE, Integra Life Sciences. Because then it's almost like it's like the trifecta. you got everything kind of working together, the seasonality with the short interest with the options. So just a fun screen to look at for potential buy ideas.
Okay. All right, so that's fun. I could sit and do this all day with you, which we have done. There's so much on the Erlanger chart room, and if anybody wants to take a demo, reach out to me or Jeff, and I can hook you up. And it's there's a lot. There's a lot, and it's really very valuable. So let's do this. I don't want to make it that long today because we've done that in the past. Can we look at Tesla?
Sure.
It's falling today.
Just doesn't look good. The put squeeze kind of played itself out, and now it's just kind of going sideways. But as you can see, the short rank is low, 31%, 0.87 days, and the tech rank's at 10%. So not a fan of this name.
Is it still a type 4 on the screen in the middle?
Oh, yeah. Oh, well, no, it's not. Well, let me tell you why. Why isn't it? Oh, this has to be below 30, and it's at 31.
Oh, okay, I get it. And the seasonality, if you just pop that second one, just make it larger.
Yeah, I'll just do this.
Weaker.
There you go. It's coming into its weak period.
Yeah.
Which
I've fallen and I can't get up.
I mean, we're out of the best period of strength, and it really hits hard on let's see right here, the 21st of February, and then it ends on the 23rd of March. So you got a good solid month where this thing traditionally struggles.
Got it. Okay, so let's jam through. It's a lightning round time. SMH, please. We've already talked about semis, but let's just review.
Absolutely no one short it. And what we do on ETFs is we do not have a tech rank because too many of the ETFs are tied to the performance of the S&P. So what we would look at is over here, our trend direction. So right now it would be improving, but it's in what we call rally mode. Up here, green is uptrend, red is pullback, red is downtrend, and then green is rally mode. So there's a little bit of a rally kind of underway, but very little short selling here.
How about triple Qs, please?
Same thing, low, in rally mode.
Well, we saw in there's that little, the short ratio popped up a little bit, not much.
A little bit.
The other thing is, the thing that I think is really important, and I've been kind of harping on it, is if you look at the recent lows on the option rank, you had all the green dots, which signified the heavy put buying, and the move higher has worked that off to 37% now.
Yep.
And that, I think, is really the tell of the whole market right now.
Oh yeah, absolutely.
Okay, moving on. ATER, I don't even know what this stock is.
No one short it.
Okay. All right, no one's short. Don't know it.
Below $5 stock, and the tech ranks.
Can we do a firm? AFRM, buy now, pay never.
No one was short it. Funny.
Wow.
It was short though. This is like a little nuance to kind of hit. So you can see the absolute number of shares are going up, but the short ratio is staying flat. And why is that short ratio staying flat? Because the denominator is increasing. So the number of shares that are being purchased are going up, and that's what's causing this to drop. If the number of shares
basically high volume
dropped, then go the other way. But
and
this
in the middle there, it's been a type 4.
Yeah.
No one's short, and it's
fabulous.
Long squeeze.
Yeah.
And even at the lows, you didn't have that much put buying. It'll be interesting to see if that starts
a little
to
bit
move
in there,
higher.
a little bit at the end of January into February, and then it disappeared.
Okay, Apple, please. And yes, I do believe asking do you think money is hiding in stocks like Apple, since they have a great balance sheet and lots of free cash flow? Yes, absolutely. People are hiding in Apple and all the mega caps, and rightfully so, because they're great companies and they're super liquid. But go on, Jeff. Are you seeing this drop?
Oh, there we go. I see it down
Yeah.
below. I got my real life charts going. So this is maybe a good thing just to show people, because there's a couple of people who are looking at the work now, and they're all kind of fascinated by this. This is I'm going to pull up. Let's pull up the Qs because they're dropping the most right now. So each morning we determine, and this is what a lot of the HFT and the algo guys do. I'm going to make this a full page. What resistance is for the day. So on the Qs, it was 364.43. Pivot was 360.49, and support is down here at 354.48. We've also found brown line here is yesterday's 2-hour low. So right now we're trying to break through that low. This blue line is the 1-hour low for today so far, and then these dots here, 5-minute high, 5-minute low, and then 30-minute low, and then kind of 30-minute high up there. So we're probing lower levels, and you can see we hit the 1-hour low, and then we kind of bounced off of it. We're going to come back and retest it really, really quickly. And just for kicks, here's volume. You can see volume dropping off. I talk to Tom a lot. I'll say to him when things are falling apart, like, "Hey, is your VWAP kind of confirming this as well?" So these things really do work pretty nicely together. And this screen can be done in Bloomberg as well. These tools within an actual Bloomberg chart. So if anyone's interested, that's kind of a fun way to look at it. I've kind of on the intraday, I've made this. I have a lot more stuff here. So this is a fun thing when things are dropping, zero lag momentum. You can see how intense the selling is, and it's pretty good. Like, it's dropped. It's not just sitting kind of right around this level now. All these are 3-minute windows I'm looking at that are tracking through the course of the day, and everything's looking, it's a real struggle right now. Today is a struggle.
Yeah, I certainly would agree. Okay, we're moving along. I have a few random energy tickers, which I'll get to offline, but can we look at OIH first of all, and then I want to look at SLB.
People have been shorted, and they've obviously started covering, because you can see the short ratio is now dropped for 5 periods in a row. So that's 2.5 months. And we're just down at like the 50%, we're at 49%. So
a lot of call buying in there as well with the red dots.
Oh yeah, but you know what? They were right. They actually so it's a 2-step process. It's not only is there excess call buying, but how are we doing against the DMA channel? And you can see down here is the DMA oscillator, which says, are we above, or if it's yellow, we're in the channel. We haven't gotten any red since like back in here. So yeah, so like basically the call squeeze never developed.
Okay, can we look at SLB? It's sort of the same. Yeah, it looks identical.
Yeah, absolutely identical.
Okay. Roku, please.
Shorts are in it, and they're making money. So maybe at some point they decide to cover, and it's had excess puts, but we really haven't had. It's trying right now to do a little bit of that. Let's just make it a little bigger, and make these a little wider so we can look at the days. Yeah, like it started happening right there in its descent. It never got into the DMA channel. Now it's doing it. So maybe that can evolve. We'll have to see. But it is starting to come down from 100 to 77. And once it goes below 70, then we're kind of like the put squeeze is over. But it's trying.
Yep. Okay. Square SQ.
Short selling at the highest it's been. This could become a really nice squeeze.
Yeah, I think so. I've been kind of watching it.
I saw someone upgraded it this morning, right? It got an upgrade from someone this morning. I'm pretty positive. So
yeah, okay.
But so let's go back to this point so everyone kind of understands this. So the short ratio is also called the days to cover ratio, and the theory is I think it's a wrong theory. The theory is that that's how long it takes people to cover the short position. Here's the problem with it. If shorts are competing with people that actually want to own it, and there's a lot more people that want to own stocks than short stocks, right? That's just the market. You can make an argument that the short ratio actually needs a multiplier to determine how long it would really take the shorts to cover if they're competing against longs that want to be in there. So I would say I like to use a multiplier of 2. So that would mean it would take 10 days or 2 weeks for 2 trading weeks for the shorts to cover out of square. This could be a heck of a mover, Tom. You agree?
Yeah.
How's your DeMark stuff look on it?
It doesn't, I don't have a clear exhaustion signal. And what I've noticed, just basic, is it's had a very solid declining 20-day moving average, and it's right there again. And I think it needs to start to see the 20-day bottom and then lift above to give me some more confidence. But yeah, I think there's potential there. I'm just not quite there.
Yeah, I mean, if you look at it, there's really no resistance until you get up to like $150, right? It's
Yeah,
like that would be, I don't know. There's your lottery ticket play, right? Buy
exactly.
the March 150 calls in Square.
Not a recommendation.
I agree, not a
Okay.
recommendation, just a comment.
Upstart, UPST, please.
Yeah, we were looking at that one earlier. Let's see. You know, no one short it really, and it's like just kind of barely moderate at 54%. Tech rank is kind of dead. Although it's kind of interesting over here. We're a big fan of relative strength. Phil's theory always is if he was on a desert island and he was trading stocks, and he could only have one indicator, he would use relative strength. So it looks like it's trying to turn up against the S&P, trying to turn up against the sector, and trying to turn up against the group. So, but it hasn't really done it on those. It's kind of at the point where it needs to break on through the other side, so to speak.
A lot of those names right now in the market.
Oh yeah, a ton. And it's kind
A
of like
lot.
if they break to the downside, there's going to be a whole nother level that things are going to go to.
Well, on that note, can we look at Facebook or Meta or whatever the hell they're called now?
Well,
I know.
just doesn't look great. And now people have covered too. So now it becomes what's interesting is now it gets close to being a long squeeze.
Yeah, that's what I was mentioning it yesterday on Real Vision. It's because you get a lot of people, these big gap downs, and all the people come in to buy. And if you were short and you didn't cover here, you're an idiot. So if you covered and then it drops a little bit more, it's those buy the dip people that are getting run over here. And there's no shorts anymore. Nobody's daring to short it at these levels, but it probably will go a little lower, especially if the market cracks again.
Well, look to the far right, Tom. Look at the relative strength lines. I mean, I got to tell you, it's been a long time since I've seen something that looks like this. I mean, it's just a free fall, right?
Yeah.
And
Okay,
it's on the S&P, and it's on the sector, and it's on the group.
Yeah, it's
horrific.
End of days for them. Valet, VALE.
Nice looking chart.
Yeah.
Not a lot of shorts. You know, this is worth a mention. So when you see this and you're like, oh, short interest is involved, you really want to look and see, are there true buyers in this name? And so here's how we kind of look at it. This is Tom, I don't think you've seen much of this, but we do draw like when there's divergences. So like when it hits across all 3 levels, this is the one we post in chart room. It's the volume swing. But when you get like 3 red lines or 3 green lines, that is indicative of a potential divergence occurring. So you can see how the software knows to draw like the line that way. So there's like your divergence kicking in, and you can see how it draws a line there. This was a great one. I mean, look at you got to pay attention when all 3 of them line up, and that was the peak in the stock. It'd be nice to see if we get another one of these coming in. But the point is the volume swing medium, which is what we use as our indicator with clients. It's the one we post, and it's our main tracking one. It's really positive. So there is clearly people buying shares of this.
Okay, GDX. There's just so much on chart room. It's just GDX.
Oh,
so much. too much. Nobody's short.
No one's short.
Yeah.
How
That's
about
why this has
GDX?
just been so frustrating because,
Look at that. Nothing there either.
yeah, I know. I'm long, so just, and I'm not far off from my cost, and it's just, I'd like to see shorts come in, but it just, you can't get them. You just can't get shorts to come in, and it's basically trap longs and value buyers.
Hey, so here's kind of a fun thing for you, Tom, on this right now. So what I'm showing is ignore the TSIs is choppiness. So choppiness is a very cool indicator, and it's very applicable to what's going on with GDX and GDXJ. When you get to a high level, like right there, back in September of 2020, it's indicative that a new move is going to occur. And it's probably the only technical indicator that I know of that it just says, hey, you got an opportunity now to make money or lose money, but it is not directional in nature. So when you get to these high levels, it's indicative of a new trend beginning. And that trend was to the downside. We're getting there right now. Like if we have a couple more days, so it's choppiness is tracked over the last 14 days. We get more sideways action, we're going to get that number up to a high level. And then when you get down here, like at the bottom, that is indicative of the trend being exhausted. And then it needs to build up and go back to the other level. But Tom, that'll be fun to watch because if you get high choppiness, that could finally get this thing going.
Okay. MSOS. I don't think we have enough data on this, but this is the cannabis ETF that I'm long. Oh, look, shorts are coming in. Good.
Mm-hmm. And a good number of them.
Okay.
I like it.
Yeah, that's positive. And the relative strength is starting to turn.
Well, in this line in our charts, this is a 65-day moving average. The reason we like a 65-day moving average is because it's representative of 3 months of trading. And so, you know, it's almost breaking through, which is pretty interesting.
Right. Okay.
Yeah, that's a great, I feel like I've really learned something now.
Yeah, I will say I'm hearing through my cannabis contacts that there's positive, potential positive news coming out of Washington, which I don't think is that edgy, but I think it's positive. And buyers are higher,
right?
What's that?
They need to make it legit so they can tax it and pay for all these projects that we have.
Yeah, no kidding. Okay, so let's look at MOS. And I'm just you want IPI as well, but let's just look at MOS, and because they're kind of similar.
MOS is a classic example of a type 2 doing great, but no one short it.
Right.
And you said IP what?
IPI. Okay, we'll do it.
Same thing.
Yeah, I mean, it looks like it's trying to make some sort of move here.
Yeah.
And let's move on. ARC.
Nothing.
I've been saying nobody's short this. And look at every little bounce. Every little bounce you see call buying, and look at, there's no put buying right now, 33%.
What's interesting is all of them look the same. Like there's ARKW.
Yep.
ARKG. I mean, the chart patterns are almost identical. ARKF, which to me, that all four of these show that there's an absence of people wanting to buy these now. I think people are staying away for the time being.
Yeah. And I've heard just a lot of people that keep saying, "Oh, I should we be buying these for a bounce?" And I'm, no, thank you. I think that if what will happen is, the last one to break for Kathy Wood is Tesla, and when that breaks, I think it's going to be the death and for these funds. I mean, I think it's just going to be a mess.
Well,
okay, Illumina.
Her biggest holding, Tom, across like all of them, because we put out this weekly email that looks at changes and then lets you see the portfolio and chart room and everything, is this Teledoc. And this thing is just, it can't get out. It's same thing. She
owns a lot of Robinhood as well. She's been buying it all the way down.
We've
I don't
just
know.
started tracking that. We've just
Yeah.
started tracking that. And it's pretty awful looking.
Okay, let's look at alumina. ILMN.
Been a tough stock
Yeah, nobody's really short. There's some
since
put
about
buying,
August. It
but
just
not enough. Yeah, it's been tough. There's biotechs are just dreadful. Let's look at Tilray. TLRY.
looks like that MSOS, right?
Yeah. So you're seeing some squeeze starting to happen a little
Yeah.
bit here. Okay, that's good. Let's see. What is BTEGF?
I don't know if we have that one. We'll see.
Yeah.
Yeah, we have it in the system, but we don't have a short intensity rank on it. I'll look into that. That's a Canadian company.
Right. Any last ones? Oh, Palantir. PLTR.
This
Lot
one
of
could
shorts.
move. This one could be a squeeze.
Yeah.
Let's look at the volume real quick. Let's just take a look and see.
Oh, I've got it. We do
Still
have some more.
negative. You what?
We have some more. Okay.
Yeah.
Yeah, it's messy. Can we look at CCJ? This one started to move on some positive news with the uranium.
Yeah.
It's
Kind of
trying to
neutral.
turn a little bit.
I'd call it neutral.
Yeah. Groupon, GRPN, please.
GRPN.
I didn't know this still existed.
Yeah, it's got some shorts in it. So if it can improve, then it could become a squeeze. But the tech rank, it finally started on this little move up right in here. It improved, and then it just failed. And look, it just failed right at the 200-day and just fell apart again.
Okay, I have a couple that I want you to do just
Okay.
because Viacom, the VIAC.
No one short. Tech rank's
So,
improving.
yeah, call buying.
So,
Just a little concerning, but it's the tech rank is definitely improving. And let's go to look at Expedia, EXPE. They came out with earnings. The stock's trading nice.
no one shorted.
That is just crazy. I mean, maybe
We're
that's
buying
just
it.
maybe that's just a put squeeze as well right there. Just looking at that.
How about booking? The booking chart looks identical. They came out with earnings too, right?
Mm-hmm.
And then ABNB.
Let's look at some mega cap too. Amazon, which I reshorted.
Kind of strong. I can see that. Put squeeze is gone.
Yep,
Tech ranks
that's exactly
up to
what
50.
I thought.
And yeah, this is I like this as a short. I like this as a short.
Yeah, you have a lot of very hopeful people in there right now, and if it breaks 3,000 again, it's lights out.
Especially if we get a test of the January low, then then this could be doing the same thing. It could be going back to that level pretty quickly.
Okay, let's look at. Okay, do we have any leftovers? Okay, hold on. Let me go to my tech page. Hold on. Did we do Apple? We did, didn't we?
Yeah, that looks awesome to short. This is exactly the type of pattern that I like for a short in this market right now, because I'm too worried about stocks that are down a ton and are basing that could hold a level, but something that's having a hard time getting through its prior highs and is just congesting there and doesn't have shorts. And then let's throw one other thing in there. Let's look at the seasonality. Yeah, we're not that great actually. The next big good period is June into July, and then September, October. But seasonality doesn't dictate; other stuff dictates. And I mean, I love it as a short, Tom, because like if we can't get through 175, if we get through 175, you cover, right? That's an easy level to cover. But
Yeah, I mean, I think 180-ish, I think. I mean,
yeah,
it's tough to short because you've got basically the Apple employee doing the buyback with his elbow firmly on the buy button all day.
yeah,
It's tough.
yeah.
Just a couple others. Microsoft. See, this is another one that people are hiding in.
Yeah, I like this too as a short.
I just think it could just fall off.
And it's already had the put squeeze played out from like here into here, and now it's just
Mhm.
kind of going sideways. And this probably should work itself off in the next couple of days.
Okay, just looking backward, can you pull up Snap? Because this had a rather extreme reaction. Let's see why.
There's some shorts there.
Yeah, well, think about if you were the guy that sold your position at that $25 level or that
Yeah.
day, and then all of a sudden it just gaps up 50% or whatever it did. That would just be a little tough to handle.
Yeah, look at that.
Okay,
That one day,
Starbucks.
that was such an
Starbucks.
outlier, though. It's crazy.
Yeah,
It's just such a disorderly chart, you know?
stocks are hard. That's it. It's never that easy.
It's definitely setting up for a put squeeze. It's just been struggling, you know. I mean, this is a great one.
Core.
Yeah, I'd like it as a straddle where I buy calls probably at a higher magnitude than I'd buy the puts.
Mhm.
Yeah, that could be a really great trade. You know,
Okay,
one thing I know we're going to see on Starbucks, Tom. If I
Mhm.
click on trend, if we look at, oh yeah, look at this. I knew this would happen. I knew this would be the case. Look at this choppiness number. It's 70. It's like saying it's getting ready to do something. You know, we don't know what it's going to be, but it's getting ready to do something.
Exactly. Okay, so I think we should just cut it off because I've got stuff to
Yeah.
do, and I know you're a very busy man. I just
Yeah.
want to thank everyone for joining us. We'll do it again in 2 weeks, and if anybody has any questions, please reach out to me or Jeff, and we'll get in contact. And if you have any requests, you can also email me, and I'll send you a couple. Don't send me your whole portfolio, please.
Hey, so Tom, the next data goes through today's close. So it's going to be a good one to look at because we're going to get all this kind of the bounce back up and you know, now the struggle. We're going to get a lot of that in. So that's going to be really interesting to see.
Well, awesome. Well, Jeff, thank you so
Tom.
much.
Have a great weekend.
Talk later, and thanks to everyone, and have a great weekend.